It's the last one for the week and the month of April. Welcome to Business Morning on Channels Television. Good morning. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for joining us. Let's take a look at the news now. All prices slipped in early trade today, taking a breather after touching their highest in 6 weeks as concerns of wider lockdowns in India and Brazil to curb the COVID-19 offset a bullish outlook on summer fuel demand and economic recovery. Brent crude fell 29 cents to $68.27 a barrel in the early trade. The last day's trading for the front month June contract, and the U.S. West Texas Intermediate crude for June was at $64.66 a barrel, down about 35 cents. The world's second most populous nation is in deep crisis, with hospitals and morgues overwhelmed as the number of COVID-19 cases topped 18 million on Thursday.
And to some company news now, Airtel Africa has announced the appointment of Mr. Olusegun Ogunsanya as its new Chief Executive Officer, replacing Rupnatha Mandava, who is set to retire from the board of telecommunications firm. The appointment of Mr. Ogunsanya is contained in a statement sent to the Nigerian Stock Exchange. It adds that the new CEO, who is presently the Chief Executive Officer of Airtel Nigeria, would join the board of Airtel Africa with effect from October the 1st. 2021. Mr. Ogunsanya, who has more than 25 years business management experience in banking, consumer goods and telecoms, joined Airtel Africa in 2012 as the Managing Director and CEO Nigeria and has been responsible for the overall management of its operations in the country.
Well, bigger congrats to him. Well, the governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, has been explaining the decision of the Apex Bank to reinstate Dr. Shola Adeduton after he was removed as the managing director of First Bank Limited. Speaking to journalists in Abuja, Mr. Emefiele says that no query or complaint was made against Mr. Adeduton prior to his removal this week, and the financial regulator is satisfied with his performance in line with the intervention effort of the CBN on the bank. Do take a listen.
Tunde Hassan. To us at the CBN, not only is it imperative to protect the minority shareholders that have no voice to air their views about what happens in this bank, also important is the protection of over 31 customers of this bank who see First Bank of Nigeria as a safe haven for their hard-earned savings. The bank maintained healthy operations up until 2016 financial year, when the CBN's target examination revealed that the bank was in grave financial condition with its capital adequacy ratio and non-performing loans ratio substantially breaching acceptable prudential standards. The problems at the bank were attributed to bad credit decisions, significant and non-performing insider loans, and poor corporate governance practices. The shareholders of the bank and the First Bank Nigeria Holding PLC also lacked the capacity to recapitalize the bank to minimum requirements. Indeed, these conclusions arose from various entreaties by the Central Bank of Nigeria to them to recapitalize this bank.
That was the governor of the central bank there, Mr. Godwin Emefiele. We're going to be discussing this issue this morning. And to share his thoughts on the action of the CBN, we have Head Retail Investment Management Group, Chapel Hill, Mr. Ayodeji Ebo. Mr. Ebo, thank you for joining us.
Yeah, good morning, and thanks for having me.
Good morning. Great to have you. Well, First Bank of Nigeria, CBN, has been in the news yesterday and today. And the CBN noted that it took exception to a situation where a systematically important bank such as FBN would reconstitute its board without previous consultations with the regulator. For you as an investment analyst, what are your thoughts on this?
Yeah, thank you. I think the first thing is to allay the fears of the customers that First Bank is safe, that their deposits are safe, and there's really no problem with their funds. And now looking at what the implication based on the briefing from the CBN governor yesterday. So based on what we understand from the briefing is that the First Bank has been supported by the CBN, been given some forbearances. And if we recall, we look back looking at the data as of 2016, the non-performing loan was as high as 26%. And when you compare that to the 5% threshold of the CBN, and I think over time, we saw that continued reduction in the non-performing loan, which I think now can be traceable to some of the forbearances that the CBN granted to the bank. And if we look at for investors, and based on the decision the CBN has taken, which is to protect the minority shareholders, and we feel that with the new management or the intervention, things would normalize and we'll begin to see some traction. Because if we look at this, based on what the bank it's doing, when you look at the classification as a systemically important bank, we also don't expect that the CBN would have also folded its arms and not also intervene when there are issues. We've seen it. This is not going to be the first time. We've seen it also in the past where CBN governors step in when they discover that there's a need for them to step in and stabilize the bank, because banking is all about confidence. And what the CBN is also trying to, if anything happens to First Bank, it's not only First Bank that would suffer for it, it's also going to affect the financial system and affect confidence generally. So it's important that there needs to be that sustained confidence in the financial system. And looking at what they may likely the reaction for the shareholders, yes, we expect some new reaction today. We expect that the shares will dip further, but we know that there's still significant potential for the bank. When you look at the top line of the bank, it's like in terms of revenue, it's always like the highest in the industry. But where we know the challenge is the cost to income ratio, which is above 60-something%. So we believe that the management that has been restored, which used to be old management that has been running, we would see how they can also intensify effort in bringing down the costs. We expect if the forbearances is taken away now, it means that we may likely see an increase in the non-performing loans in the interim, but we are sure that will be restructured, and over time we will see First Bank also bounce back. But the most important thing is to be rest assured that deposits are saved with the banks, and there's really no cause for alarm.
Okay, so, as you expect, there are a lot of sentiment going on around here. So some people would like to know, is this CBN's intervention because of the forbearance it is given to First Bank, or is this just a normal thing that could happen to any bank?
No, I think it's not just because of the forbearance. Based on the briefing, is that CBN has been supporting the bank in the past since 2016, and which, based on their examination, their targeted examination, they discovered that they need some form of stability, that the bank was challenged, and they've tried to stabilize the bank. That's like almost 5 years ago, and they've tried to stabilize the bank since then. I will recall then they could not even pay dividend. So I think from time, based on the CBN Act, they also have they have that authority to also intervene when they see that there's a major challenge within the banking system. Because the major issue, it's easier to stabilize. And if we notice that for for what the CBN is also trying to do is to ensure that they sustain confidence in the financial system, because it's very easy to lose confidence and it's difficult to build it. So rather than just leaving the bank alone to just leaving the bank and not intervening, they have been supporting. We don't know whether there have been interventions in terms of also funding in the banks, or we're only aware of the forbearances. So it's only maybe proper that if they have been intervening and they've been providing this support all these years, they will also need to be aware of any changes that may happen within the bank before any changes is made. So I think it's in line with the CBN Act, and this is not the first time we're saying that. And it's always just to provide some form of stability within the financial system.
Okay. All right, Mr. Abel. Well, the CBN is also concerned that the removal of a sitting MD CEO has dire implications for the bank and also, portends significant risk to the stability of the financial system. What are the possible risks here?
Yes, I think if we look at the normal process that when a bank MD, when we look at other banks that or we look at other banks that have also changed their banks in recent times, there's always that succession plan that there's at least maybe like 6 months notice. You notify the market and you also give a date that when the new MD will be taking over. So, and because the bank is also regulated, there would also be need to get approval, and it's also publicly listed, so the news should even also be sent to the Nigerian Stock Exchange, because it can also influence or impact on investors' decision. So I think by and large, it's a requirement that you get approval when you are changing at the senior level, to get approval from the CBN even before making any announcement. So I think maybe that's where the mix-up came from, and the CBN had to step in.
Okay, so I know you've talked about investors and shareholders' confidence and all that, but yesterday was a lot of sell-off on CBN holdings. What do you see today from this news, from the shareholders, from the depositors?
Yes, I think for depositors, and that's why I started before going into my analysis, is to assure them that the deposits are secured. There's no financial problem with the bank, and with the CBN backing, that should even give them some rest of mind that their deposit or their funds are secured. But when you're looking at it for the traders, for the investors, that the equity investors, we would expect that because of a lot of the uncertainty and some of the new facts that are unfolded, we would expect that there may be some major sell-off in the situation. It also presents opportunities also to benefit from this downside. So it's this initial shock would expect that the share price would dip today, and but it's all bank. It's a strong bank, and would also try as much as possible with the management. Also quickly want to make the bank more profitable and more efficient. I'll put it more efficient in terms of reducing the cost to income ratio, so that there's enough for the equity shareholders in terms of dividend.
All right, Mr. Abel, with this development, what's your outlook for the banking sector moving forward?
Okay, thanks. Very valid question. I feel that if we look at the banks over the years, they've always been very resilient. Despite challenges, you would see that for a lot of even the banks that have released their first quarter results, you can see the top line and bottom line also growing and been very impressive, just for few banks that recorded a decline. So I believe that there's a lot of potential within the space. We're seeing this new trend of banks also moving, going through the holding structure to also be able to take advantage of some opportunities within the financial services space. So we believe that there's still, when you look at in terms of financial inclusion, there's still a lot of opportunities. And we know most banks now have realized that they have to grow the bank using digital and not opening physical branches. So we will see more shifts to digitalization, to fintech, and that would also help grow, reduce their cost, and also improve their top line. So I believe that the sector is very resilient, and also with the continuous examination from the CBN. When you look at the capital adequacy ratio rather of the banks, for the systemically important banks that have been put at a threshold of 16%, and you compare that to even from what other clients in terms of the requirement, you can see that there's enough buffer for any shock. And we saw the COVID period did not even impact on a lot of the banks despite the oil decline we saw last year. When you look at it compared to 2016, which means that the risk management system has also been improved upon. And I believe that there's still a lot of potential for the banks, or for Nigerian banks.
All right. Well, I'd like to correct that. I think in one of the questions I did say CBN Holding. Obviously, it's not CBN Holding. It's FBN Holding, First Bank of Nigeria Holdings. Well, as we begin the month of May, Mr. Abel, what's your outlook in the equities market? Obviously, we'll have the impact of these developments in First Bank, and then in the fixed income market. What is your outlook for both markets?
Okay, thanks. For the equities market, we still know, in view of the rising yield in the fixed income market, we're still very cautious. For short-term traders, we still feel that they should trade with caution, because when you compare, you do a risk-return analysis, the fixed income market may be a place you want to increase your weightings to fixed income compared to the equities market, and that would impact on the performance of the market. Yes, we expect results may be positive, but we'll see that we're not very bullish on the equities market this year, as long as fixed income yields remain very high. And for fixed income, we still believe that there's still a bit of upside, even when you look at the shorter end of the curve. 1-year T-bill at 9.75, we still feel that it may cross, it should be able to cross to double digits. And also at the bond, there's still at the bond auction in May, would expect that we should begin to see 14% levels or more in the market. So for traders, equities market, you need to trade with caution. But if you are a long-term investor, this is the time that you need to lock into stocks that have values, and you'll be able to benefit from that in the long term.
So much for sharing your thoughts with us this morning.
Thank you
Mr.
so much.
Ayo Dijebo is a head retail investment management group of Chapel Hill, Denham. Thank you. You're welcome back. Well, as many countries continue to grapple with the dearth of medical oxygen in the wake of the COVID-19 pandemic, the Lagos State Governor, Babajide Sanwo-Olu, has commended Total and NNPC and their partners for the donation of a medical oxygen plant to the state. The governor says he's excited at the facility, which has the capacity to produce 100 bottles of oxygen per day and is the biggest of such plants to be commissioned in the state.
A brand new up-and-running standardized oxygen production plant situated here at the Gbagada General Hospital in Lagos. It's been built and has been donated to the Lagos State government by an international oil company, Total Upstream, its senior partner, NNPC, and their partners, Sapetrol, Sinop, and Prime. Let's take you through some protocols for the handover. The presence of the state governor, Mr. Babajide Sanwo-Olu, along with his cabinet members, perhaps underscores the importance this is to the state health care.
I also want to commend Total Nigeria and its partners for putting together this oxygen plant here today. And as has been said, it has a capacity to produce 100 bottles a day. I think it's bigger than the one we commissioned at the IDH, because that one was 60 bottles. So I think Total and NNPC and all of it deserve a round of applause. This is much bigger than the earlier one that we had commissioned.
Leading the top executives of Total and representing the managing director, Total Upstream Companies in Nigeria, Mr. Mike Stanza, is the deputy managing director, Deepwater, Mr. Victor. He highlights why Total and its partners have embarked on this project.
This gesture is one in a series of interventions that Total has made to support the federal government, Lagos, and other state governments since the inception of the coronavirus pandemic in Nigeria.
The Group General Manager of NAPIMS, NNPC's investment arm, a critical pivot, also joins the fray on how this allied facility is a major contributor to health and wealth in Lagos.
We implore the people into whose hands this plant is being handed to maximize its utility for the benefit of the people of Lagos State.
With the remarks done, Lagos State takes possession of this thoughtful investment and the governor does the honors. Official figures show that more than 625,000 deaths occur annually in Nigeria due to hypoxemia, insufficient oxygen in the blood, or low blood oxygen saturation. In children, that's about 120,000 and accountable for the under 5 deaths in Nigeria annually. This plant has been applauded as a timely intervention.
All right, we'll begin our next conversation now. Nigeria has been ranked 103rd for mobile and 146th for fixed broadband on monthly speed tests global index, behind Cameroon, Senegal, Ivory Coast, and Liberia. So with the new normal, having businesses and even socials very active online, internet speed certainly has a great impact on the economy, investment, and every aspect of life. Now we have Tommy Balogun, a certified financial education instructor and founder of the Green Investment Club. She talks to us on the tech investment and related issues. Hello, Tommy. Great to have you.
Hello, good morning. Thank you for having me.
Good morning. Thank you for joining us. So Nigeria is lagging behind Cameroon with 16 percentage points, ranked 87 in the world. And Cameroon has the 4th fastest internet speed in Africa, behind South Africa. What is Nigeria doing wrong here?
Well, I think that infrastructure issues affect the speed, because really, for you to get the best speed in internet, you need a lot of broadband and fiber laid, right? So in terms of infrastructure, it seems to be lagging behind in terms of, compared to the rest of the world. And one of the things we will probably need is like a nationwide project to lay more fibers so that we can increase the speed and the quality of the internet we have around the country, in not just in Lagos State, but across the country as well. Because what you find is there's a lot of concentration in some major states in Nigeria. But if you look across Nigeria, that's not the case. And even in the states where you have the concentration of a lot of internet providers, you still find that, like you said, speed is lagging, because there's not, the best internet connections come from fiber when it is laid, right? So we need a lot more in terms of infrastructure, spend, to ensure that the internet speed and quality can also improve over time.
Assuming this is done, what opportunities are inherent in the sector for employment and especially for youth?
Absolutely. Nigeria is a major and a powerful country with a lot of entrepreneurs. We have a very powerful entrepreneurial climate. If you look at the past few years, we've produced major giants like Jumia, like IntoSwitch, Andela, Flutterwave, Paystack. Those are entrepreneurial companies that have grown, and definitely based on the use of the internet infrastructure that has developed in Nigeria. In terms of attraction of investment as well, Nigeria is like the major hub and was the leader in Africa for the highest number of investments in startups in 2018/2019. So there's huge potential because even with slow internet speed, not being as fast or not the fastest in Africa, you can still see that Nigeria is very entrepreneurial. Our digital ecosystem is growing remarkably across multiple sectors like the fintech sector, health tech sector, and so many other things. E-commerce is also growing. A lot of business are going online. 2020 saw a lot more businesses trading and e-commerce online. So there's huge potential for all of that. So once they get the internet quality speed going, I believe that we would continue to grow as a major digital ecosystem across Africa because we already have the entrepreneurial skills, mindset, and powers to back that.
All right, let's look at the user base. Now, we had 104.4 million internet users in Nigeria in January 2021, and that number increased by 19 million between 2020 and 2021. What impact does this bring to the economy?
Well, you know, in 2020 with the pandemic, we saw a huge increase in terms of online spending, you know, digital payments and online spending. Right, so I would say that a lot more people are beginning to get comfortable because there's also the issue of trust, right? There's this low trust for the digital ecosystem. So, but a lot more people are beginning to trust the system, right? So while you have a lot of people that are internet users, a lot more of them are on social media. What we want to see now is a transfer of that, you know, use and, you know, in terms of internet numbers to businesses, right, to online systems, to digital ecosystems, to digital payments. 87% of transactions in Nigeria are still done in cash, right? So all of that is probably affecting how the digital ecosystem can grow. So in spite of those numbers, what we still need is strong trust, right, growing in the economy for digital ecosystems.
All right, so it's commonplace to hear that ideas rule the world, and so it's easy to believe that once you have an idea, then you can walk your way to success. But how easy is it for startups in the tech industry?
Not so easy at all. The cost of doing business and the ease of doing business is really high compared to African countries within the same space in West Africa, right? But what we do have is the never, Nigerians don't, you know, we're die-hard people. We take on challenges, we take on anything we see that is a challenge, and we take it up, because if you see the businesses that have grown, I mean, Flutterwave is a unicorn. That business grew from Nigeria. That's the potential we have. You see the Paystack story as well, an amazing story acquired by Stripe for $200 million. That is what we see, that in spite of the fact that it is not so easy to set up a system, because the ease of doing business in Nigeria is really low. In terms of the cost of doing business is really high as well. Skills, getting the right labor, and, you know, the kind of people that you should add to your team, a major challenge as well. But in spite of that, we see some businesses still thrive. What we need is more investment in the ecosystem from end to end. How do we grow labor and skills, you know, the digital skills required? How do we ensure that the digital payment structure and infrastructure is well laid out and is supported by the regulatory authorities, right? And not squashing innovation. How do we ensure that the disruptive innovation required to help all of these sectors grow is, you know, in place? So yes, it is tough, but what I can say is on the back of that, we see some startups continue to grow and thrive. So there's definitely opportunity. We just need the government, right, to continue to ensure that the ease of doing business gets better. And I'm sure that once that is done and once we start working towards that, it would help. The economy is tough, no doubt. The economic climate is even worse, right? But the opportunities definitely exist. And on another conversation I was having with someone, I said, look at telecommunications industry. When they came into Nigeria, we saw huge growth, right? Employment of labor. They've had their share of issues with regulatory authorities, the risk of doing business in Nigeria, definitely not been so easy for them. The cost of doing business in Nigeria as well is tough. But the potential and the growth they have brought has to be looked at as well. You know, you have to look at both sides of the coin and don't just focus on the fact that it's tough. Yes, it is tough. We want it to get better, but using the telecommunications industry as a case study, we've seen that in spite of all of that, there's still growth. It has brought huge innovation, huge opportunities for Nigeria, and so more industries can grow in spite of that.
All right, Tommy, what about government role in boosting investment in tech? Are they doing enough, and what would it take to have affordable, high-speed internet in the country?
Well, for me, I would like to see more public-private partnerships, I really don't think it's the government's role to, I mean, the government's role is just to ensure the ease of doing business. The government's role is to ensure that, you know, the economy is attractive for investment, because definitely we have the numbers, we have the growth potential. What we do not want is a case of the regulatory authorities sending mixed signals to investors. We do have a lot of investors, you know, looking to come into the Nigerian space and invest, but as when the regulatory authorities send mixed signals, you know, you're this today, you're this tomorrow, it really, you know, affects the investor optimism. So what we do want is stability, we want consistency, we want innovation, we want the regulatory authorities to keep up with innovation and not squash innovation, right? The fact that you don't understand something is not a reason to squash it. There's a reason to bring people to the round table, bring them up and have discussions and see how we can make this innovation work for the economy and improve the lifestyle. We do have the highest number of, you know, poverty levels, highest poverty levels in the world, right? So we definitely need this innovation. So for me, the government's role, ensure the ease of doing business, ensure that you're not sending mixed signals in terms of your regulatory guidelines and framework. This will encourage the private sector to, you know, we have a lot of wealthy people in Nigeria that can invest in digital startups, right? We don't just have to look to people in diaspora as well. A lot of Nigerians go and invest abroad. We need them to bring that money back home and invest in the startups that we see potential in.
All right, Tommy, thank you so much for your thoughts on the program this morning. Thank you for joining us in Business Morning. Tommy Balogun is the founder of Green Investment Club. Thank you so much.
Thank you.
All right. So we head over to the markets now with Eddie. See, we were in the green yesterday.
Good morning, Laddie. Yes,
Morning.
we're in the green. I mean, for the most part of yesterday, the market was in the negative territory. But last-minute interest in Dangote Cement and MTN Nigeria pushed the index up. At the same time, there was a slew of corporate disclosures yesterday. One was from Dangote Cement saying that it would vote to renew its share buyback program in the forthcoming AGM. So that's also why investors took advantage of that. On the one hand, we also saw investors dump the shares of FBN Holdings because the CBN, you know, expresses displeasure with the way the bank reappointed a new MD. I wonder how investors are going to react today when they hear the news of the CBN dissolving the board. And then we also had Seplat releasing its earnings, talking about paying dividends quarterly. So we saw investors react possibly to that. But then for FBN Holdings, let's talk to Mohammed Jamil, a stockbroker at APT Securities and Funds, for more on that. Good morning, Mr. Jamil. Thank you for joining us on the program. Hello, Mr. Jamil. Can you hear me? Oh, if you can hear me, let's just talk about the board tussle of FBN Holdings. Now, yesterday we saw investors dump that stock when the CBN talked about its displeasure on how a new MD was appointed. But then later in the day, the CBN dissolved the board. What impact will that have on the share of that company today? And what does that say about the corporate governance structure?
Yes, thank you. I'm very happy to be on the program this morning. You saw we received the announcement from CBN yesterday with a serious shock. I mean, from the bank with a serious shock that now that the government is coming out of the wound that they have been since 2016, why would the company come up with such an announcement to remove the MD and so on? So, as far as we are concerned, we have seen that the allegation the CBN leveled against First Bank that it has been giving non-performing insider loans and also poor corporate governance practices. So all these things, what we see, we in the equity market, we saw a situation whereby CBN is trying to rescue FBN from such from the issue they are having. So the rescue mission that the CBN is doing, we know that though we are expecting that there's going to be settlement around it initially, people will want to dump the shares for today. I think Monday, by Tuesday, everything I believe is going to stabilize because of the fact that CBN is here to rescue the bank from further sliding down.
Well, while we wait to hope that things stabilize, we saw some earnings come into the market yesterday from FBN Holdings, from Access Bank, from FCMB. What did you make of these numbers?
If you look at most of these results released yesterday, about 12 companies company released their results yesterday, and you see what they released so far. All of them that are on the growth trajectory for the fourth quarter. You see the result of Vitafoam, Total, Bua, Okomo, Dangote, Sugar, Seplat, Union Bank. All of them, they grew their profits for the fourth quarter. So all this information and all these issues is showing that these companies are very heavy, and we expect that those that want to invest in the market, they should also have a long-term investment horizon in mind. Those that want to do it short time, we want to encourage them that they should trade with caution because of the fact that there's low volatility in the market, and those companies that are traded in the Nigerian stock exchange have very good fundamental, and their result is on the growth trajectory.
All right, Mr. Jamiu, thank you for your input on the program. Have a lovely weekend ahead.
Thank you very much.
Mohammed Jamiu is a stockbroker at APT Securities and Funds. Well, the market was up 1.75% yesterday at 39,461.20 points, with the month-to-date at plus 1.2%, while the year-to-date returns moderated to minus 2%. Now, we recall that in the previous trading session, Dangote Cement had dropped about 7%, and that was what really dragged the market. Yesterday as well, Dangote Cement gained by about 7%, and that also impacted the market. The equity cap was at 20.651 trillion naira. Volume, value, and deals traded yesterday were higher compared to the previous session. We saw 271.68 million units worth 2.03 billion naira, and all of that changed hands in over 3,800 deals. The sectoral performance was mixed. The banking sector was down 1.35%. Like we had said, investors sold off heavily on shares of FBN Holdings. That really dragged the market down. Consumer goods was down 0.22%. Industrial goods was up 3.58%. Of course, that was due to the gains from Dangote Cement, while insurance was up 1.36%. Oil and gas was unchanged. At the unlisted securities market, or the NSE OTC market, the NSI was up 1.85% at 789.19, while the market cap was at 560.96 billion naira. We saw about 13 million units worth 374 million naira traded in 70 deals. Now, to talk about the fixed income market is Bankole Odusonya, the head of fixed income at UBA. Good morning, Bankole. Thank you for joining us on the program.
Good morning.
There was an OMO auction yesterday. What was the turnout like, and how will that shape trading today?
Yeah, the turnout was very aggressive, simply because federal allocations had just come in, so there was a lot of money. However, there was few OMO bills on issue. Just about 20 billion was sold. So what we have seen is that the demand has simply moved on to the Nigerian Treasury bills that were sold on Wednesday. So there's a lot of demand for April 28th one-year bills. That's April 28th Treasury bills, Nigerian Treasury bills, which is currently going at about 9%. That bill was issued at 9.75, and we expect yields to continue to go up, given the news that the NNPC may not have enough funds in the next 1 or 2 months. So basically, that news that crept into the market yesterday will be pushing demand and demand for higher yields in the fixed income space, basically.
All right, Bankole, thank you for those updates. Enjoy your long weekend. Bankole Odusonya is the head of fixed income at UBA. Well, the bond market continued its bearish trend yesterday as we saw yields expand in that space. There were 32 deals worth 13.50 billion naira. At the Nigerian Treasury bills market, we had just 11 deals worth 3.58 billion naira. At the CBN Treasury bills market, we didn't see any activity in that space, while at the OMO market, we had 16 deals worth 29.99 billion naira. Well, Monday is a public holiday, so the markets will be closed. So we'll just have to wait and see how investors resume on Tuesday. Well, that's it from me on the market review, Ini.
All right, Eddie. Well, I'll keep an eye on that FBN stock for sure. You know how I like to buy the dip. All right, Eddie, thanks for the update. We'll take another quick break now, and when we come back, we'll do an opening call to London. Do stay with us.
You're welcome back to the program. Well, as the lockdown eases in the UK, different sectors have to deal with the implication differently. Juliana is here to tell us more. Hello, Juliana. Good morning.
Good morning,
Good morning. The property market is in the news again. Prices have surged as the lockdown eases. Any factor driving this other than that the lockdown is eased?
Well, yes, according to data released this morning by Nationwide, it has shown that the housing boom shows no sign of waning. In the month of April, house prices surged by 7.1%. This follows a surge in March by 5.7%. There are a couple of things. I think the most important thing is the fact that last month, the Chancellor Rishi Sunak doubled his measures for the housing market. The stamp duty holiday tax was extended until the end of June, and of course they started this new mortgage guarantee scheme. So if you've got 5% deposit, you can get one of these pretty expensive properties in the UK. And so over the past 12 months, house prices have raised by more than £15,000. Pretty difficult to get on the housing property ladder in the UK if you don't have enough buck in the back of your wallet. But this is pretty good. Of course, we are seeing, as you said, that lockdown is gradually easing, so I think a lot of observers expect this flamboyancy to last for months to come.
All right, so still following the ease of the lockdown, bars and restaurants are struggling to recruit enough staff after thousands left the sector. How are they dealing with that?
Well, it's an interesting story, actually. Before the pandemic, about 3.2 million people working in the hospitality sector. So this is pubs, bars, restaurants, hotels, etc. According to the official data released by the Office for National Statistics, since the start of the pandemic, over 300,000 jobs have been lost due to a variety of reasons. One of them was Brexit. We do know that a lot of Europeans were working within the sector. There was a lot of confusion about their status post Brexit. Of course, we got that skeleton deal just in on Christmas Eve. A lot of people couldn't wait for that time and obviously left. Some are still on furlough. If you're on furlough, you can't be working. And so there has been a cause for concern by some restaurants, especially restaurants outside of London. Apparently, the most sought-after vacancy at the moment is a chef. I can't cook that well, so unfortunately I can't apply for that position. But the chefs are, you know, really highly wanted. I think, according to some data, the search for chefs has gone up by about 800%. So that's a wanton vacancy. Should anybody be looking for a job in the UK, Ini?
I guess you can learn. I mean, you can be a chef in how many months? But anyway, the Bank of England is expected to sharply upgrade its annual growth forecast next week. What data do you have for us, and what are we expecting from them?
Well, you know, at the beginning of the year, a lot of people were expecting the historically low interest rate of 0.1% to go into negative interest. That's where the economy had been. But now, of course, the economy is rebounding. If we look at some of the data we've seen from PMI in the month of April, it shows that we have reached levels that we weren't at since 2013. Restaurants have opened. The retail sales are doing exceptionally well. We got retail sales for the month of March, and they were at February pre-pandemic levels. So the economy looks to be in good shape. I believe the last time we heard from the Bank of England, their forecast for this year was that growth would be at 5%. We're expecting them to increase that to about 7%. Of course, we've got to add in the vaccination rollout. That's been pretty successful. I think a lot of people are going to be looking at what they plan to do with quantitative easing and bond buying. I believe at the moment they've been purchasing government bonds at a rate of £4.4 billion per week. Is that going to be halted or decreased? A lot of people are expecting that. And some are expecting interest rates to actually increase. It is at 0.1%. Could it go to 0.2% or, in fact, 0.5%? I think those are what a lot of economists are mulling over at the moment, but we shall have to wait and see, of course.
Yeah, sure, wait and see. Thank you so much, Juliana, and do take care later. So we now move to the crypto market, and the altcoins are taking a bit of the shine now, I guess.
The king of the altcoins, Ethereum, doing it well, smashing new highs this morning, $2,700. Let's look at the charts on the FTX exchange. Now we have still in the MACD is still in the bullish region for Ethereum. KDJ still in bullish region, so this is actually doing very well and prompting other altcoins in the market. Now, market cap $2.12 trillion, up by 1.68%. We have 24-hour volume, 141.60 billion, down about 0.48. Bitcoin dominance, losing that dominance to Ethereum, 47.90%. Let's talk to Azubike Wisdom. Now, hello, Wisdom.
Hi, good morning.
Good morning. Yeah, so I noticed that exchange tokens are doing pretty well this morning. Do we have exchange token season?
Sorry, I didn't get that. Sorry.
I said exchange tokens seem to be doing well this morning. Do we expect an exchange token season?
Yeah, of course. Actually, we are already in an exchange token season because if you look at exchange tokens like BNB, KCS, and Huobi token, KCS is Qcoin token, right? They are doing incredibly good. If you look at their charts, their fundamentals, everything looks very good. So we are still in the season for exchange tokens, and I feel like they're still going to do more.
Okay, and Ethereum hitting new highs. What do we expect for Bitcoin price going into the weekend?
Bitcoin right now is still struggling to break above 65K. So I think right now we are still going to see Bitcoin needs to break 55K. Till then, we are still going to stay in that range between 53K to 55K. So I think that is going to be going to the next new month.
All right, Wisdom, I know you love your altcoins. What's in your portfolio right now?
My portfolio right now is really, really hot, right? I have lots of BNB, and then I have BNB. I have a lot of ETH right now because ETH right now is performing BTC, right? So I moved some of my holdings in BTC into ETH because right now with the dominance going down, we can see the market favoring altcoins, and ETH is what leads the altcoin market. So I'm more in ETH right now. And
okay. All right, Wisdom. Thank you so much. Enjoy the weekend. Profitable, hopefully.
Yeah,
all right. So, in it, there we have it. XVS up by 29%. Huobi token up 27%. OKB 24%. KCS KuCoin shares up 16%. It's looking green in the altcoin market right now.
It's an alt season now. But remember, this is not a financial advice. Very important.
Yes. Always seek a professional before you go into this market.
Exactly. All right. Thank you so much. That's where we draw the curtain for the week on Business Morning. Thank you so much for watching. I'm Imi John Mekwa.
And I'm Ladu Williams. Thanks for watching.